Hey everyone, welcome back to Upside Down Data. Today I want to talk a bit about algo and where our models think it might be going from here. So I put a tweet out a couple days ago with this chart that I'm showing you here. This is output from the new probabilistic forecast model that I have been building, and this is it applied to algo. So the way that you can read this chart is the y-axis here is the probability of upside 180 days in the future, 6 months in the future. So that's what this blue line is. This is the model's output. The green line is algo's price across time. And so essentially, if you see a very high number here, so the model is outputting a high number, that means it's estimating a very high probability that there will be upside 6 months in the future. And indeed, that's what we see. It did a very good job identifying in the bull phase here, high probability of upside 6 months in the future. But then notably, and I think critically, as we went into the all-time highs, you'll notice the model started to get quite bearish. And why was it getting bearish? Well, because it realized that 6 months in the future, things were not looking so great. Based on everything it was seeing, it was saying the outlook 6 months from now is not looking great for algo. And it turned decisively bearish. And indeed, that's what happened. We had hit the all-time high back here in September. And then really algo just kind of ended up bleeding out down through here. You can see the model got extremely bearish all the way back over here, just 10% chance of upside over here, and indeed down we went. Now, more notably, what's happening more recently is the model is starting to get a bit more bullish on algo. For the first time really since the all-time high back here in 2021, the model has now gone ahead and flipped back in the more bullish direction, giving better than 50-50 odds of algo's price being higher 6 months from now than it is right now, basically higher 6 months in the future. So it's currently at around 60% chance of upside that it's estimating. So not nearly as high yet as it was during this whole kind of bull period back through here, but not too bad. I mean, obviously you'd much prefer to see it at 60% than down at 10%. We saw what happened when it was down through there. Nothing great happened as it was in these deep low values here, down 10, 20, 30% chance of upside. Now we're over on the other side. So that doesn't mean we have to rip off to crazy rallies immediately. What it might suggest is that the tone of the market is changing, kind of like what happened coming out of here when we see the model start to get a bit more hopeful. Even though we had a move down here in the March 2020 crash, we quickly reversed that to the upside and off we went. And that was in this kind of period or regime when the model was flipping into a more cautiously bullish stance. And as the model kind of gets more and more bullish, maybe the more optimistic we can be going forward. So that's what I'm going to be looking for with algo when it comes to this model. That so far so good, we flipped to that bullish footing. It might suggest that this low that we put in towards the end of last year might be a reasonable low to hold at least for a while, and could provide a launching pad for us to be able to start trending up. It looks like we're trying to set in a higher low here. Now can we go set in a higher high down the line and start going basically back into an uptrend, get back into this range that we're in through a lot of 2022, then more importantly, eventually break out some of these higher levels that we had seen before then. So it's still early, we're going to have to wait and see, but the more that the model stays bullish, and especially if it gets up into this really high range, seeing above 80% chance of upside 6 months in the future, that would be a hopeful sign. So I'll be keeping updates coming out about where this model sits on algo as time goes on. But I want to talk about another model as well. So I'm going to flip over to our website here, polaritydigital.io. It's the site we've launched in collaboration with Jay over Daily Crypto Analysis. Definitely recommend checking out his channel if you have not already, puts out really great content. And what I want to talk about here was the medium-term UDPI, or upside downside potential indicator. So if you're not familiar, that's one of our risk models here at the channel. We actually have 3 versions of the UDPI. We have the short term. Here's what moves to play over days to weeks. The medium term, this one. Here's what moves to play over weeks to months. Then the long term, which is months to multiple months to even years in its focus. I want to talk about medium term because I think it kind of meshes nicely with what we're just talking about with that probabilistic forecasting model, predicting out 6 months. Medium term, this would kind of fit into that category of kind of weeks to months in the time frame that it looks at. Now, if you're not familiar, this model, the higher the level, so that's this teal line here, the higher the level, the higher the risk. And you can see at these high points, these really risky points that lead to big corrections, you see that it's spiked out at really high levels. So it ranges from -5 to 5. At this high back over here is up at about 4.5, and then this one here up 4.5 all the way up to 5 before we had this big bear market that then came after. But then more recently, at this local low that we saw through here, we really bottomed out towards the bottom of the scale, and we bounced off of that. And so if the tenor of the market really has changed, right? If this kind of regime change being signaled by probabilistic forecast model plays out, what this might tell us is that in the medium term, we have quite a bit more realistic upside than downside potential from here. And we might think is that if we do catch this kind of continued bounce off of this local low here, be able to move back to the upside, you might think it's reasonable for the medium-term UDPI to trend back up to some of these levels, like, for example, right around 0, between -1 and 0, which was kind of the resistance here, actually broke above it here to get actually into the positives. And then, of course, over here, similar story, getting right up to around 1. In this case, we actually got all the way up to about 2. I would see somewhere in that general ballpark being kind of the highest reasonable expectation I would have for any kind of rally right now before we might have to cool off. I personally think it's highly unlikely that algo just goes ripping back to all-time highs and gets to these levels on the medium-term UDPI again immediately. I think it's going to take more time, more effort, kind of like we saw through here, that any protracted uptrend, I think it's got some work to do before we can ultimately enter into that more bullish stance. So I think it's reasonable to think that some of this medium-term upside is in play, but I think where we cap out is probably going to be similar to what we've seen in kind of these type of levels, not these type of levels. I'm not seeing this as being a realistic outcome in the too short of a future. Now, the model, obviously, it needs to take into account all that it sees as plausible, and so technically it is plausible we could go back up into these ranges. I just personally don't think that's very likely. I think the more likely thing is that we cap out at a resistance range like around here. So that's what I'm going to be watching for. If algo is able to kind of continue this uptrend and set in a higher high and continue upward, this is the level I'd be looking for before seeing maybe a bigger pullback, for example, like we saw back through here. So obviously not this financial advice. You should make of these data as you will, navigate as you see best fit. But that's what I'm looking at across these two models. The tenor of the market, the sentiment in the market, the direction might be shifting along with this more bullish sentiment we've been seeing in crypto more generally. And there is plausible room to the upside according to our medium-term UDPI to maybe go ahead and realize some of that upside before we might need to cool down quite a bit more. Now, this is also dependent on us actually having an alt season that allows alts to run like algo. If it's just a Bitcoin only show like in 2019, then algo might continue to underperform. But if we do get that shift to a more of an alt season type of dynamic, then I think it's very plausible that algo could join the party. Now, one thing I did just want to also talk about with algo that I think is just important to keep on people's radar, because not everyone's aware of this, but it's really important, I think, in my opinion, keep this in mind with algo. So algo is kind of interesting in some ways on some of the dynamics with this. So if we just flip over to its price chart here over on TradingView, we can see that it basically its price round-tripped basically entirely from going up to all-time highs, then back down over here. Basically round-tripping from levels we had seen in 2020 is where we're trading right now. But an interesting divergence that you'll notice is if you flip over to the market cap of algo. So remember, market cap is the multiplication of price with circulating supply. How many algo are out there, are circulating? Look at what happens when we look at the market cap. It is not round-tripped back to the levels we saw in 2020. It is actually still hanging out at elevated levels, kind of at the lower end currently of what we saw in 2021. So what the heck's going on here? Why is there such a big discrepancy? Well, as I mentioned, it's about circulating supply. Remember, market cap is the multiplication of price by circulating supply. And what this means is that there's a lot more circulating supply of algo around now than there was back here. Because basically at lower prices, you're multiplying by a higher number, which gives you a higher market cap than you were back here. And we can just see this if we just divide the price of, the algo market cap by its price, by algo's price, that gives us an estimation of circulating supply. We're just kind of shifting around that calculation to output now circulating supply. And what you'll notice is that through that bull run that we saw in 2021, really kind of leading into then, the end of 2021, you see these massive increases in circulating supply that happened for algo. There's that accelerating vesting that happened. Tons of algo got released into circulating supply. Why is this important? Why should we care that the circulating supply of algo is now way higher than it was back here? We're talking about 7.2 billion algo by this estimate relative to 1.2 at the start of that 2021, run going up through here. Well, the reason we should care is that for algo to go and set a new all-time high in price, its market cap would have to be significantly larger than it was back through here to get to those same prices. Because more circulating supply exists for algo now than it did back that first time around. If we just go look through here, that leading to that big first bull phase, we started out at 1.2 billion. Now we're at 7.2. It means that for algo to get back to all-time high prices, we're going to have to see a significantly larger market cap at, basically algo's going to have to expand to a bigger market cap because it has more circulating supply. And so it could be a lot harder for algo to get back to those prices. That's the thing that we just have to keep in mind. It's not impossible. Everything's possible. If algo gets a lot of enterprise adoption, a lot of other uses, anything's possible. Sure, it could do that easily. But just keep in mind that if nothing changes like that, it's going to have a harder time. More likely than not, more money is going to have to flow into algo to get it back up to these prices than happened the first time. Because you have a lot more supply in the market, more people who can sell their algo and keep prices depressed, stop prices from being able to move as high. Now, technically, if no one wanted to sell their algo, if everyone's just sitting on it, then some of those dynamics don't matter. I personally just don't think that's very likely. I think there are people who are holding bags of algo that they bought at higher levels who would very happily sell once we get up to those levels, if we get back up to them at all. And because there's higher circulating supply, there might just be more holders who'd be likely to do that compared to what was happening over here. A lot less circulating supply, a bunch of people probably weren't willing to sell it, so then you had demand fighting over a more limited number of algo to really shoot price up. In the future, we have a lot more algo that could realistically enter the market that could help suppress these prices. And so the reason I bring this up is that I think tokenomics is a thing that people just have to remember, and the dynamics of circulating supply matter. They matter in the upside that we can expect. Now, does this mean that we need to be bearish on algo and say it's going to zero? No, not at all. Of course not. And as I said, there's a lot of fundamental things that could change with algo that could bring in an upswell in demand that could counteract this increase in supply that now exists for algo that really rapidly expanded. And the other good news, of course, is that a lot of that expansion has now happened and it's not going to happen again. This big acceleration of algo circulating supply is not going to happen again in the future. This accelerated vesting has already played out. But the fact still remains that there's more algo now than there were back then. So we just look at the price chart. You just have to keep that in mind when you think about how easy it's going to be for algo to go and reclaim all-time high levels should we enter back into a bull phase. Again, not saying it's impossible. Definitely not saying it's impossible that algo can hit all new all-time highs. But you need to keep these dynamics in perspective. And really the reason I bring that up in the more medium term is just think of where algo could go in this rally. Just remember that it's playing in a sandbox. It's playing in a situation very different from here, where it was able to slice up very quickly. If we get more bullish footing, I think it's plausible to expect that it might be a more slow-paced rise, that it might not be as explosive, and it might frustrate a lot of people, but frankly, if you understand the supply dynamics, it would not be very surprising if that were to play out. No guarantee it would play out that way, but just something that you have to keep in mind, in my opinion. So to kind of wrap everything up then, I think that a bullish disposition on algo is very reasonable right now in the kind of medium to long term. The data are starting to point in that direction. There's plenty of plausible upside that algo can realize. But I think we just need to be realistic when we think about what prices we might be able to go and reclaim in that kind of a bullish reversal. It might not be as spectacular as a lot of people are hoping. But if you understand these dynamics, at least it shouldn't catch you by surprise if that plays out. No guarantee it will play out, but just something to keep in mind. All right, hope you like the content. Remember to subscribe to the channel, give the video a like, follow us on Twitter. A lot of updates, indicators, and more over there. Check out our website, claritydigital.io, for our indicators and more.